Hello ladies and gentlemen, welcome to today's webinar. I'm Joseph Novich, Senior Trading Manager with GDM. In today's session, ladies and gentlemen, it will be the second part of our momentum trading system. Speaking of momentum, the last time on Wednesday, 2 days ago, we saw the system, how it works using the momentum indicator along with two exponential moving averages with 50 and 100 period. Also, I mentioned that this will be the first stage of the whole setup, but basically the two ways, the last time's strategy and the today's setup as well can be used in both different setups, as different systems, based on the fact that today we won't be using moving averages on the setup itself. So using moving averages along with the whole setup as today, you will see how we're actually going to be losing a lot of pips of profit, potential profit. But speaking of today's system, the one indicator in addition that we will be using is actually going to give us our exit strategy. Basically, we're not going to be focusing on 2-to-1 risk-reward ratio type of exit strategy, but mostly we will be defined by the setup of the oscillator that we will be using. The one which is called Awesome Oscillator. Now the Awesome Oscillator, I'll just give you the basics on it, the definitions, and of course the what to look for, or the standalone usage of the oscillator itself as a standalone indicator on a trading system. But before we do that, let's see how it looks on the chart. First of all, to find it as easy as possible, we go to Insert on Indicators, Bill Williams, and of course we will find the third one from the top, the Awesome Oscillator. Now there is nothing here to input levels of any kind of sort, so basically we're going to use it by the default settings of it, and this is how it looks. It's something like the moving average, convergence, divergence indicator. However, the things that it's measuring is that it is focused on market momentum. So as you can see, all of the indicators that we're using in this month's webinars, ladies and gentlemen, are focused only on momentum. As one more time, for those that were not here from the beginning of this month's webinars, we're focusing on momentum mainly because of what is happening on the market right now. So one thing is very important to understand. Every day is something new coming on the market, more and more news from fundamental perspective. But the fact that it is very, very risky to trade on small time frames, not that we're not going to be focusing on that in the next two webinars, but what I mean is that the lower risk that you will be taking on the market is to focus on larger time frames and mostly on momentum rather than on volatility, because when large volatility is expected, as it's today, there is greater risk, of course great rewards coming along with it, but mostly what the company is focusing on is to minimize the risk to all of our potential and current clients with us. Basic definition of the Awesome Oscillator is that as an indicator, it uses to measure market momentum. It calculates the difference of a 34 and 5 period simple moving averages, with of course the simple moving averages that are used are not calculated using closing price, but rather than the each particular bar of a midpoint. So it's generally used to affirm trends or to anticipate possible reversals. Therefore, it's made to be very accurate On any reversals, it can give you an exit potential strategy, and of course combined with the momentum indicator itself, it gives you a very powerful system. But because the nature of the oscillator is designed to have values that fluctuate above and below the zero line, the generated values are plotted as a histogram, the one that you see in front of you, with red and green bars. As of course, when it's a green bar, the value is higher than the previous bar, that's obvious. Therefore, it comes with a different color. When the oscillator values are below the zero line, the short-term period is trending lower than the longer-term period itself. So the information can be used for a variety of types of signals, based on the fact that if you're going to use it as a standalone indicator, let me show you. If you are going to use it on smaller time frames, say something like 5 or 15-minute charts, this oscillator itself can give you not only the potential direction of a trend, you know, by red bars if it's below the zero level, but with green bars on south of the zero area. Also, those are the particular retracements of the price. As we can see over here, you know, we can see a strong bullish momentum building up, but of course with a red bar we can see the retracements of this particular trend. And of course it's a very small time frame, therefore trends don't usually last that long, and they have the ability to change very frequently. But if we have to go a little bit more backwards here, on the crossing of this zero level, and when the momentum starts building up to a peak, where of course it ends, the red bar gives us our exit. If that's what you intend to use it as a standalone indicator, it's also very powerful, small time frames like 5-minute to 15-minute charts. That is also a very good opportunity for you. However, the one fact that we have to consider is that using it as a standalone indicator can give us a lot of false signals, especially on sideways directions like this one here. And then we can obviously see that it's not very reliable one indicator which you can use on its own. Therefore, we combine it with the momentum indicator, which is a slower indicator, and it can give us a bit more heads up on whether the particular trend is going to be sustained, strong, whether its signal is reliable, and we can trade it. And we can see that the particular exit strategy that the Awesome Oscillator is giving us, we will not be bound to 2-to-1 ratio. Rather than that, we will take the full opportunity of the trend itself. With that, of course, comes higher risk, because the stop losses there, they have to be on the recent lows, which means on high momentum and a strong retracement, your stop loss could be hit, but we will see how we can protect ourselves from that. It's all considered into the system itself. As a standalone indicator, some traders are using the Awesome Oscillator as I mentioned, the basic signal provider by crossing the zero line, which is also called as bullish cross or a bearish cross. When it crosses the zero line to the downside, of course that's a bearish cross, and vice versa. When it crosses it to the upside, that's a bullish cross. In means of lower risk, we're not going to be using these bullish and bearish crosses. As anyone can find in the web, anywhere in the internet, how you can use that Awesome Oscillator, but only by experience you will find out that there are much better ways to sustain profits rather than being so risky player on the market. Now let's have a look back on our 4-hour time frame. Start mounting up a little bit bit by bit our system itself. As the last time we've been using the momentum oscillator, so I'm just going to go straight forward from the function button up here, and I'm going to be using that momentum oscillator that we used the last time. Red color is a style, period of 30, it's the same as we were using it for 4-hour chart. It measures the last 30 bars or the last 30 sessions or candlesticks, which is on average base for our time frame is much better. Levels, again, preset from the last time. We have the 100 level, which is very important for our charts, especially when it comes to in terms of crossovers. And when combined with the oscillator, both of these as a momentum indicators are giving us pretty much a very, very powerful system with lower risk and higher reward potential. When it comes to the same situation that we saw the last time, if we have to move on to set up our so-called moving averages, you know, from those guys that have been here and commented on the system itself when they were off the webinar, you know, afterwards, the comments that we received were actually straightforward. There were quite good questions as well by why we can't really take that particular opportunity from here up to the top here. Isn't there something else that we can, you know, use to sustain? Well, the fact that I've also thought about this and a very long time ago, your questions are most welcome. So to take the full opportunity up to here, my answer is sometimes is a little bit too risky. But with the awesome oscillator, you will have that opportunity multiple times. And you will see when we start tracking back, you will see how in a lot of cases we will catch movements of 150 pips up to 200 pips with the so-called catch the top and bottom kind of trick. But it doesn't really work every time on 100%. Now sometimes you will have to cut it short. You know, we won't be able to catch that full movement, for example, another 25 pips or so. But instead, the setup of the awesome oscillator along with the momentum itself gives us that protection that we need. Because if we have to try to catch the tops and bottoms all the time, in some cases we will fail and we will suffer some losses that will discourage us from the next move that we need to make. Therefore, being protective and being, let's say, scared from a position that might fail you, so you can tweak here and there your particular strategy to protect you from these levels, is nothing to be ashamed of, because after all, we're here to make money. And not losing, at least not much, because there is nothing 100%, is what we're aiming for. And basically, by saying that, catching a move of 150 to 200 pips in a matter of 3 to 4 days, I would say that's a pretty good deal. And in matters of stop loss, which is, let's say, 2 times, 3 times smaller, the reliability of the system gives you larger amount of pips in profits compared to smaller amount of pips in losses, which at the end of the month, when you draw the line, you will see for yourself how your profits are built up pretty well. Your balance will be increased. Speaking of this particular case here, the last time we saw that we need to confirm above the 2 moving averages, which were somewhere around here, the 100 and the 50. Therefore, we took that move from here with a fixed 80 pip profit to 160 pip loss, which was somewhere around in this bar in about 11 sessions. Now, in this case, we see that the momentum bar, the momentum indicator here, is much faster than the awesome oscillator, which gives us an opportunity to be ready to enter as soon as a green bar appears over here. And as you can see, a powerful momentum is already built when the awesome oscillator is giving us a signal to enter. And we're actually going to be able to catch a move straight forward from here somewhere. I can't really promise you that it's going to be right over here from the bottom, because when the bar opens, it will be already on the move. The market will be start pushing up. So let's say we catch it somewhere in the middle. from somewhere here, for example. Our close will be on this bar, about 65 pips. On this bar, because we already saw our histogram changing colors here on our awesome oscillator. And therefore, we are keen to believe that the momentum will start slowing down. We are not sure because the market is already here. We don't know what's going to happen next. So we're exiting the market, collecting our profits on one lot, that's 650 pips of profit in about 5 sessions, 4 or 5 sessions, that's about a day. I would say that's a pretty good deal on such small, insignificant move. Well, considering the fact that the system is protecting us from making mistakes, we don't really want to know what's going to happen next. We're only waiting for our new opportunity, which is either going to be over here and exit when the next bar green opens, or somewhere in the future when the market keeps moving. Now let's see what's going to happen if we scroll a little bit backwards. We see our momentum indicator here. That's the first thing that we need to notice as a faster oscillator, faster than the awesome oscillator. We see that it's breaking off. We see the bars start building here. And our target is somewhere around on this level. So that's about 17 pips of profit. However, our awesome oscillator continues to be in negative territory on this bar. And it keeps building to the downside. And our exit is again over here with about 67 pips of profit. Those are multiple opportunities. However, when we see that those bars keep building and shrinking up to the upside, we cannot take another opportunity until a change in direction has appeared. But unless we see something like this, we can safe to say that the momentum is already over and we can wait for another opportunity. Here, however, is a very interesting situation where we saw that bounce off here, but from this stage onwards up to here, about 40 pips, we can see that our awesome oscillator gives us an exit way before the market retraces down to this stage, no matter that it keeps going up. But as we can see, the momentum is bouncing off. Therefore, we can see over here green bar building up until our next exit opportunity. And again, multiple options until we reach the peak of the momentum that will give us enough on this particular trend. As we see, ladies and gentlemen, in those cases, we're not really catching the full move up here, okay? Because the awesome oscillator is giving us the retracements on which we should also consider exiting, because there is a possibility that something like this would happen, and then you will be breaking even, or at least, or maybe sustaining some losses, about 40 pips from your entry, or maybe break even, depending on where exactly you managed to enter on this volume here. But considering the fact that this is only one currency pair, and as we saw, the reliability of both indicators can give us pretty good profits. These are about 100 pips, ladies and gentlemen, in 3 sessions. So in 3 4-hour candlesticks, about 12 hours, we're getting on 100 pips of profit. And that's only one of it. Well, then in a few sessions later, we can also get another 70 pips. And as you can see, every time the bar retraces about 30%, the price retraces about 30% from its recent move upwards, the bar and the color here on the awesome oscillator is changing. So it actually tells us, get out of the market before it's too late. And as we can see, it reaches a new peak, which is lower than the previous year, and it starts moving down. And if we're waiting for too long, probably we're going to be missing on about 200 pips of profits, and that's in 2 positions. Let's say about 170, 180 pips from the closings, which is making it one move, one position of 100 pips and another of 70 to 80 pips, depending on exactly where you've managed to close that position. So it's not exactly pip fixed take profit or stop loss, but it's rather than the awesome oscillator that it's giving us these exits, particularly entries plus exits. So we're not focused on exiting the market when we see peaks here on the momentum indicator, because as we mentioned the last time, that momentum indicator could as easily as keep building up. Basically the distance between the 100 here and the 98 here can actually start shrinking in, and you will see how high it can go. So when you start backtracing this system, you will see that the values here of the momentum indicator are changing. They could go even to 110, and even below to 995. So these are not fixed levels, ladies and gentlemen, but that's why we need that 100 level, which is basically our trigger point, with the 0 level on the awesome oscillator to give us the entry levels to make our profits plus exits right away when we see the change of color of the awesome oscillator. And the same thing, if we see another bar increasing with the same color, of course that means that it's going to be another move to the upside, which we can take an opportunity and we can collect some more profits. But again, always exit when you see the change of the colors. So much for the profits, which we will keep tracking back. Let's talk a little bit about our stop losses. Now in this case, okay, our entry is somewhere on this bullish candle here, or let's say in this one. It's either way. Our stop loss is usually below the recent low, which is somewhere here. But if we see bottoms like this one, we're safe to put it somewhere down here, which makes it around 100 pips away from our entry. And if you want to put it this way, it's pretty much from here up to here, about 2 to 1 type of ratio. But it's still not always like that, because sometimes the recent lows, as we can see when we start backtracking, those recent lows are going to give us very few pips, basically something like that. You see 25, 30 pips, maybe 50 pips, something like that, maybe sometimes even less than that, maybe 10 pips. But still, we're not going to consider any stop loss which is less than 30 pips away from our entry. One thing is important, because when you actually open here, we need to be absolutely sure that when the price for some small amount of time turns negative down here, that our stop loss is not going to be triggered. Therefore, we should put it safely a few pips away from the recent low or the recent lows. As you can see, those two hammers here. This is also a safe place to put our stop loss. Anyways, let's take a look further back. Somewhere over here, for example, we can see some small break of the momentum here. However, the next case when our awesome oscillator breaks down, we can see that our momentum is already above the 100 level, making it an invalid signal. So one more time, the combination between these two are going to protect you most of the times from the sideways trend, which does not exclude the fact that we're actually going to be making some really good profits in a matter of between 30 to 60, 70 pips of profit on the sideways direction. Yet again, those are cases on only one currency pair. So everyone can trade on the trend, but it's very difficult to grab the sideways direction, especially when you have no idea when a new trend will appear. So on a very good defined trend like this one, even a moving average will be enough for you to trade. However, if you don't want to switch between systems, this one is particularly good. In most of the cases, you don't need moving averages with this one, and it will actually make you pretty good profits. On this case here, one more time, we see that the momentum is breaking down here, okay? The momentum is going below the 100, pointing to a lower open on the next bar. But our awesome oscillator, which is a slower oscillator than the momentum, is still controversy is actually telling us that we should stay away for the moment. Until, of course, we see that case. It's breaking below. The bar is changing. It is below the zero level. Our momentum is also below the 100. And from somewhere on this bar, when it opens red, we're safe to say that we can enter and exit somewhere around on this, I think, candlestick here. Let me see. This is the green one. You can see it here. This green one, that makes us about 70 pips of profit for a few sessions. That's what I'm telling you when I said sideways directions. That doesn't really necessarily mean that we cannot trade it with this system. Rather than the one that we spoke about the last time, which mostly focuses on trend directions, because we're using moving averages and they're only used in trends. That's why we're not using them here, because we're trying to get all the profits, all the opportunities that the market gives us, only to increase our reward potential, our profit potential. With that, of course, we are increasing a little bit our risk potential as well. But let's take a look at a case here, which we also saw the last time, that moving averages gave us an opportunity from over here. So it's the same case with the awesome oscillator. As you can see, from those that followed us the last time, we saw that we were actually pip based, and we took a profit on the next bar, which was about 80 pips of profit. I suppose that was the case here. However, in this case, we can see that our green bar appears down on this particular candle, gives us around 130, 140 pips of profit, which is double the size of the one that we saw last time. However, as I mentioned, higher reward brings higher risk potential. But that doesn't necessarily mean that we won't make it up for it. Only because the amount of profits that we're making here are larger than the 80 pip fixed profit the last time. But the system that we spoke about on Wednesday is far more conservative than the one we are looking over today. So this case here, as we see, we're tracking every opportunity when the momentum is breaking any of these levels here. We can see that the momentum is rising. The momentum is rising on the awesome oscillator. So the next time we see an open green bar here, we're trading until we see a red bar, which is, I suppose, somewhere around this one here. That makes it about 40 to 46 pips of profit in a matter of 7 sessions. It's a pretty good profit, which some more risky traders could even take that opportunity, but me personally, I would wait for another crossover here like this one and another cross on the zero bars on the awesome oscillator. Same case here. We see the awesome oscillator is crossing down. Now this is an opportunity which I would rather pass, because the crossover on the awesome oscillator happens way before the cross of the momentum, which takes us somewhere around this bar here, and it gives us only around 30 pips of profit in a matter of pretty much about 50 pips of stop loss, which is the recent high. And in that particular case, I wouldn't really bother taking it, because if the price action springs up back up, I would lose about 50 pips instead of making 30, which in this case is pretty much something even less than that. You can see it's about 25 pips. So I would pass on this one, definitely. So the first thing we need to notice is the faster oscillator, which is the momentum, crossing the line, and then we have to follow on the awesome oscillator. Same case, as I mentioned, is here. You see this particular strong move where we are actually catching the full potential of it from here. And the green bar, of course, somewhere here. Let's say we managed to take it from the middle of something like that. The exit position gives us 120 pips in 7 sessions. That's around this bar here. Something around 110, 120 pips in about 6 sessions, 6 to 7 sessions. Now that, I would say, is a pretty good peak. Another case, one over here, which the system is protecting us from. As you can see, the momentum is crossing, but then we're still on the green bar and it's still not crossed below the 0 level, which in that case doesn't even go there, but the momentum is crossing the 100 on the momentum indicator over here and straight forward to the upside. A case like this one, for example, okay, we see the momentum crossing, see very tiny crossover here on the top of the 100. We still see the awesome oscillator, which is slower one more time. This is our confirmation for a position, is still in the negative territory, so we're going to wait until it crosses like this one to the upside, but then multiple crosses of the 100 have already occurred. And even if you are considering to take that position, you will still be on a profitable side with, this is about, what, 20 pips? Something like that, 10, 20 pips. You're still going to be on the safe side yet again. But what I'm saying, these tiny moves are not going to be excluded out of your profits. You will still be able to grab this position, but then, as I mentioned, your stop loss should always be on the recent high or the recent low. So as we can see here, this is the recent low. Okay, we see a lot of support here. So basically, I would definitely set it up somewhere here, a few pips away from these recent lows. And safe to say that if we place it correctly, now if we've entered over here, a few pips away, that's about 15 pips. Now if I set it up to about 30 pips from the recent lows, that's about here, and we're not even stopped out, we're not hitting our stop loss at all, even from this price action before the price moves higher. So the system is set up so well, so these particular cases are filtered out up to 70% from the settings of the system itself. And the next particular cross on the momentum here is where we see this particular case cross over here. But first we see that the awesome oscillator, ladies and gentlemen, is still signaling us first before that momentum. And we can see that the price action gets it about, again, up 58, 60 pips, which is very close to the recent highs, which is here somewhere, okay, on our stop loss. So in this case, we might even be able to dodge a bullet. However, there will be cases where you will see the price action hitting your stop loss and returning back down, only to give you a false signal. So those two and the combination is the perfect setup for this particular type of momentum system. The first, we need to see that crossover, and our entry should be way over here, not over here. Why? Because we can see momentum staying in negative territory below the 100. We see one more time the crossover over here, but our momentum indicator is already below the 100. So it's safe to say that we can move to this position here. That's about 80 pips of profit, or probably it was somewhere here. Yep, it's about 70 pips on this green bar. Okay, same opportunity when it comes, again, a red bar here, over here. I suppose it's somewhere around here. It's about 120 pips. It's a pretty good one. So this one, I suppose. Was it this one? I moved it. I'm sorry about that. I moved it a little bit. That was accidental. Yep, the red bar here with the 120 here and the green bar as well. So multiple opportunities you will have to enter this particular trend. However, the only thing you have to do is follow that green and red bars on the awesome oscillator. One more time, let's see this case here. Okay, we see momentum is still in negative territory. We receive a red bar. Of course, a bit of a mixed situation here. As you can see, red, green, so on and so forth. If we still didn't close that position, our stop loss should be somewhere around here, about 23, maybe 30 pips out of our entry, something like that, which will protect us so far. However, if you see that green bar and you consider closing that position, that would only give you about 18 pips of loss, which is not so bad. The next time you actually open this position, it will be somewhere around in these cases. As you can see, I'm not even filtering out any opportunity here, and we can see about 60 pips of profits, somewhere like this, 60 pips of profit, which in the two cases here, that will actually bring us, let's say, both of the positions losing us around 20 pips with 60 pips of profit. That gives us 20 pips of clear profit out of the three positions in only just a few sessions. And yet again, another opportunity over here presents itself with a profit at another 80 pips. I think it's on this one, about 50 pips of profits. So you can see from all of this, when started making some losses from here, that's about 34 sessions. We made 4 positions. 2 of them were losing, 2 of them were profitable, but in total, the whole amount of profit is 70 pips, even if you lost about 40. So that's pretty much how accurate this one can be. Even if we continue scrolling backwards, we will see pretty much the same cases, ladies and gentlemen. We can see the momentum breaking up, a lot of bars coming by, a very good peak. You can see this one is straight on the peak when we start talking about peaks. So that's 250 pips. Well, I think that would actually speak for itself. Same cases, multiple cases. You can set it up on your charts, ladies and gentlemen. You can start tracking it. You can see for yourself, count the pip size, so on and so forth. That's about another 150 pips of profit. And you will see the opportunities that you might be able to grasp in a matter of profits with this system. Well, that's all about the setup. There is nothing complicated. The only idea is to follow the momentum indicator first, afterwards to confirm with the awesome oscillator, and of course always set up your stop loss at least 30 pips away from the recent lows, or just a few pips depending on your risk management system. I would set it up about 30 pips away from the recent low, just in case to protect myself from price action which might hit that stop loss inevitably. And of course always to exit when a bar changes color and continue to collect those profits out of it. That's all about it for today. The next time we meet will be a week from now, because next week we will be having our independence here. Basically, the office is not going to be working just for a few days, but during the week we will be here. I will be busy with some other things, so next week the webinars will be postponed, and they will continue the week after. So let's check the next time the webinars will be on 28th of September and on 30th of September. This is the last week of this month, which will, of course, we'll talk about short periods, momentum timeframes, momentum systems. We will see about trends, a bit more advanced system of trends and their reversals. So there is a lot of interesting things for you here. Meanwhile, until you're resting, until you're checking these two separated webinars, you can check us on our Facebook page. You can like us, rate us, comment us, whatever you like. And of course, for whatever questions you might have, on our website, when you open it, the right bottom corner, you will receive a pop-up chat where you can forward your questions over there in our support department, or just ask for me or for any of my colleagues, or call us on our telephone numbers for an immediate resolve of any issue that you might be having so far. Anything else? I'm always there to help you. Thank you very much for joining us. I'll see you next time. Bye-bye.